Alright folks, it's been a minute since I made a video, but today is Monday, September 23rd, 2019. You're looking at the live version of the markets. So far Dow's up 0.2, S&P 500 and NASDAQ are up 0.15. Small caps are up almost 0.4. So what I'm hoping for is, we did take a loss last week, like 1% over the whole week. Nothing really major. We were also close to like our all-time personal best in the last week and a half, so 1% is no big deal. We'll get to the charts and I'll show you what the game plan is. Okay, we'll start with the Dow. The red line is the 50-day moving average. The green line is the 20-day moving average. 20-day moving average is finally rising above the 50-day moving average. So that's normally an indication that the market is going to go up. If you look at the chart, you see that today we're still above the 20-day and 50-day moving average, which is a good sign. Indications that we should be going up. Let's check out SPY, which is the S&P 500. S&P 500 is the same thing. The 20-day moving average is above the 50-day moving average, which is normally an indication that the markets are going up, since the 20 days coming from underneath the 50-day moving average. You see today's progress is above the 20-day moving average and above the 50-day moving average. A good sign that the market has the potential to go up. Let's look at QQQ, which is the NASDAQ. NASDAQ, okay. So it looks like NASDAQ came down, touched the 20-day moving average, and looks like it bounced off of it. So as long as QQQ stays above the 20-day moving average, 50-day moving average, we'll stay in it. Let's look at IWM, which is small caps. Small caps, 20-day moving average is coming up from underneath to go higher than the 50-day moving average, as well as today's progress is above the 20-day and the 50-day moving average. So I'm hoping in the next couple of weeks we make new all-time highs in the Dow, the S&P 500, and the NASDAQ. We're going to be partial to the small caps because Dow, S&P 500, NASDAQ, they're within 2% of their all-time highs. Small caps is about 12% away from its all-time high. So our thoughts are, as the markets are going up, the small caps might outperform as the other three are making their new all-time highs. So I guess what I'm thinking is Dow, NASDAQ, S&P 500, they make new all-time highs. They might go up 3.5%, 4%. S&P 500 might go up 6 to 8%. So we're staying partial to the small caps. Let's check to see if we're gaining on Harbor Capital any. Okay, here's our year-to-date returns. So far, year-to-date, small caps are winning out. They're about a 26% return year-to-date. Harbor Capital, which is what we try to chase down, is about, it's a little over 20%. State Street 2060 target date is about 17%. And there we are, we're about 14.5%. So if you look at our graph compared to everybody else's, they have a lot more dips. For example, for Harbor Capital, You see Harbor Capital went up to like maybe like 22%, and then it came all the way down to like 10%. And that would have been about mid-May, June timeframe. And then it went up to about 23, 24%, 25%. July, August, it came back down to 15%. I think it's going to head up to about 25, 26, 27% this time. And then it'll probably come back down to maybe like 20%. And we do expect Harbor Capital to finish the year about 35 to 40% return. So you see ours, we just, just chugged along. We don't have too many major sharp ups or downs. And what we're going to wind up doing is, for the most part, we're going to attach ourselves to small caps and Harbor Capital, because those are on the chart, those are the best two of the best ones this year. And we're hoping to finish about a 25 to 30% in our personal portfolio. But you see, we have a lot less volatility in our conservative style. So that's the game plan going forward. Like I said, we are partial to small caps because small caps are like 12% away from their all-time highs. The other indexes are about 2% away from their all-time highs. So we're hoping to gain some ground on Harbor Capital and be just a few percentage points behind it for this year, with not too much volatility or too much risk on our part. So thank you for watching the videos. Comment, like, share them. If you haven't yet, please subscribe. Stay tuned. It's going to be a while the rest of the year. Later.